How's it going, everybody? It's Finance with Avery, and I wanted to make this video about the Fear and Greed Index because yesterday this index hit extreme fear. As you see right now, today, September 28th, 2023, it's right at fear. So it got right back up to fear, but yesterday it hit extreme fear. And I'm going to tell you about what the Fear and Greed Index is, how I use it, how just people use it in general, what it's made up of, and just getting the details of it. I'm going to try to make sure I don't go on tangents to make this video too long because I'm known to do that. I get real details about things, and I'm going to try to scale back a little bit, give you an overview of it, and let you know what's going on or what I'm doing basically as well. And this is not financial advice. This is for educational, entertainment purposes only. And yeah, yesterday I made a post on my YouTube channel, Finance with Avery. You're on it right now. So hey, subscribe to the channel if you're not. It's free. It's informative. So yeah, yesterday the Fear and Greed Index hit extreme fear. You see it right there. I took a screenshot of it. Had to make a post about it because I was kind of excited. I am in the realm of when the market is fearful and prices are down and broad stocks, because the market, like the S&P, let's pull it up here. I got the S&P, so let's pull it up yesterday. So this is the S&P index, basically. The S&P 500, one of the main indexes that people use to kind of gauge where the market's been and possibly where it's going. You could put some indicators in. You could put in the moving averages, 50-day, 200-day, look at, kind of compare different things. And there's just the other ones, of course, about the Dow and the NASDAQ. If you're familiar with the stock market, those are the three main indexes that people look at when they look at, like, how's the market doing, basically. The Dow, Dow 30 stocks pretty much is composed of just major stocks, yeah. And then you have the S&P 500. And then you have the NASDAQ, which is mostly tech focused. So the NASDAQ has been on the roar this year. So yeah, you see it right there. Year to date up 25.34%. Definitely has been better, but recently it's been on the downtrend. So yeah, we're going to go back over here to the S&P though. I want to pull this up because I want to compare this with another chart here soon in the video. I made some buys yesterday. I was a little anxious, let me tell you, because I dollar cost average into stocks throughout the year, no matter if the market's up or down. But when the market is down and when there's a lot of fear going on, I increase how much I'm putting into stocks, and I increase the frequency of investing in stocks, quality stocks, not just anything. But as you see right here, I increased my positions in NextEra Energy, Discover Financial, STEM, started a new position in Disney under $80. And also the day before yesterday, I increased my position in Pfizer, Target, Realty Income, and Citigroup. And I actually bought more Pfizer today. So there's certain stocks like these, and there's several others that I am going to be increasing my positions in at a higher frequency of what's possible in a composed way, as I mentioned that as well. I'm not just going crazy right here, in a composed manner as much as possible. So yeah, that's me. That's all I'm not gonna deep dive into what I'm doing and everything. Not financial advice. I'll make a video probably on the top stocks I bought in September and October, something like that maybe. But yeah, so back to this. The Fear and Greed Index hit 25 yesterday. 25 and below is extreme fear. 26 through 50 right there is fear. You have neutral, greed. It's on the CNN website, and I'll link it in the description. It does a great job of telling you what this index is and what it's composed of. It's composed of 7 indicators, and we'll go over those briefly. But yeah, the Fear and Greed Index. So the Fear and Greed Index is a way to gauge stock market movements and whether stocks are fairly priced. The theory is based on the logic that excessive fear tends to drive down share prices, and too much greed tends to have the opposite effect. Emotions play a big role in stock market prices. Now, people from the outside who aren't into stocks more, they may know that. They may think that's all it is, just people's emotions. And that's a big part of it. Technicals and financials and, guidance and earnings, they have a lot to do with prices. Definitely. Like, the numbers do matter. Even though you see these big movements when, news comes out and emotions get wild, and the numbers can matter in various ways because they can let you know, like, hey, yeah, the market's going crazy and the stocks are down, but this is a quality stock. This is a quality stock. Their earnings are still going up. They're doing pretty well. Their margins are great, different things like that. And that can help you buy a stock that's at a value because all stocks pretty much get caught up in these extreme moments of these volatility of when markets deep dive or when they go up too high, because stocks become overpriced, they become oversold, they become undersold. So you can use the numbers and the technicals and the financials to weed out the kind of certain stocks and find the great stocks, the value stocks. And there's likely they're already in your portfolio. If you've done the research, if you've done your due diligence, your DD, then you've got those stocks in your portfolio or you've got them on your watch list. So now when things like this happen, when prices really go down and the volatility goes up and you get in fear and extreme fear, you already have the stocks that you want to buy more of. So you've done the research. You can still, keep doing the research, make sure nothing drastic has changed in the company, but then you can get more into those positions. And that is That's what I've been doing. That's what I'm going to continue to do. So yes, the Fear and Greed Index and how it's calculated. The Fear and Greed Index is a compilation of 7 different indicators that measure some aspect of stock market behavior. They are market momentum, stock price strength, stock price breadth, put and call options, junk bond demand, market volatility, and safe haven demand. The index tracks how much these individual indicators deviate from their averages compared to how much they normally diverge. The index gives each indicator equal weighting and calculating a score from 0 to 10, with 100 representing maximum greediness and 0 signaling maximum fear. And I like that it's equal weighting because that is giving all these indicators a chance, not just weighing too heavily on one or two where it's like, oh, and that just gives you how the market is doing. Like, for example, the market has been doing pretty well this year, like pretty great, like year to date, you see it right there. Year to date, the S&P is up around 11.69%. As you saw, the NASDAQ was up more because that's a technology focus. Magnificent Seven, maybe you heard that term being thrown around, has driven the market up. They've been leading it. You got Apple, Amazon, Facebook, Meta, Nvidia, Google, Microsoft, and hold on, I'm missing one. Tesla. Is it Tesla? I think it's Tesla. There's like 7 or 8 of them. Sometimes you can put AMD in there. You can kind of swap one or two out, and sometimes Netflix or something. But those are the main ones. Those stocks have been doing great. They've been doing fabulous. They've driven up the market because they have higher weightings and these indexes. So when you look at the market, you say, oh, the market's been doing great, and those stocks are up. Like, wow. It's like, yeah, those stocks have really driven the market. That's why I'm just basically saying that I like that this is equal weighting because it gives all the indicators a chance to give you that overall picture of fear and greed in this situation. So yeah, how often is the fear and greed index calculated? Every component and the index are calculated as soon as new data becomes available. So how to use the fear and greed index? Per CNN, the fear and greed index is used to gauge the mood of the market. Many investors are emotional and reactionary, and fear and greed sentiment indicators can alert investors to their own emotions and biases that can influence their decisions. When combined with fundamentals and other analytical tools, the index can be a helpful way to assess market sentiment. You got to combine that with other things to make informative decisions. That's what it's about. It's not, you got to step back sometimes and realize, I may be biased. I may be too greedy. I may be too fearful, and step back and see what is going on in the market overall and compare it to the fundamentals, the technicals, the financials. So yes, here are the 7 indicators. You got market momentum, and that's what I was telling you about the moving averages. I use the moving averages often to see where stock is at compared to its previous, and I always like to zoom out and see where the prices have gone, where they've been, and where are we at in the moving averages. I typically use the 50-day and the 200-day moving averages. Right here on the market momentum, they're using a 125-day moving average. So you can see where the S&P, pretty much the main index that I like to look at. I like to look at all of them. I look at the Dow, I look at the NASDAQ as well. The S&P is be the first one that I would look at, and a lot of investors do and traders. So S&P, as you see right here, it dipped below the 125-day moving average. That adds to the fear because you see where it's been this year. Like I told you, this market has been up nicely overall, and the S&P has been above that 125-day moving average mostly since January of 2023. A little moment right there, but down. If you notice right here in October, rough. It was underneath the 125-day moving average. What happened in October? I'll show you the VIX, the volatility index, as well as what I like to use. That's one of the main things I like to use as well, as far as like seeing where stocks could be headed, where they're going. Should I increase my positions because, volatility is overblown, fear is there and all that. So yeah, right there, you see it way under. Okay. So yeah, we're just barely under right now. We could definitely go further, or we could bounce off of this. I'm not saying either one is definitely happening. It could definitely, there's indicators and there's fundamentals saying we can literally go either way. So, and recession looms, the Federal Reserve is still, have that hawkish stance on rates. They're going to keep them here for a little while, probably raise them a time or two again. Stock price strength. That is the next indicator right here. Net new 52-week highs and lows on the NYSE, New York Stock Exchange. So 52-week highs and 52-week lows, that's just basically like, let's just throw a stock on here. Let's look at Microsoft. They're kind of trading around right here in 52-week low, 52-week high. So yeah, their 52-week lows, 213.43. And their 52-week highs, 366.78. So they're a little bit above the middle. Chart for Microsoft has been trending somewhat down. So yes, they have been going towards the 52-week low, not towards the 52-week high. Many stocks are at or near close to their 52-week lows. For example, let's see, Bank of America, second largest bank in the United States based on total assets. They're trading near their 52-week low. Pfizer, very well-known medical company, healthcare company, trading near their 52-week low. Bristol Myers, another huge healthcare company, trading near their 52-week low. Exxon, gas prices. That's it. Gas prices are up. Oil prices are up. They're near their 52-week high. So yes, you do have some stocks that are definitely not in that direction, depending on what's going on macroeconomics, wide, big picture of the economic factors basically going on in the country worldwide basically, and definitely United States specific companies. But yeah, so you have certain companies that are doing that way. Let's go to another one, like retail. Walmart's going to be near their 52-week high, 162, 165. Another big retail company, Target. Of course, they're down for not just economic reasons. They got various reasons. They got theft that's going on really bad there, all that. But you see they're near their 52-week low. Pretty much they're making new 52-week lows like almost every other day or so. So yeah, and let's go to a couple other stocks here. And then we're going to go back. Home Depot. Not necessarily saying they're going that way, but look where it's kind of heading. You see where they've been. Their 52-week high, 347. 52-week low, 267. Yeah, okay. And let's see. Let's go to a big food company, in the grocery stores. General Mills. At their 52-week low. You see where they've been, $90.89, $63, 52-week low right there, and that's what they're trading around. What the trajectory of that stock price has been going down. So yeah, you definitely have, the market is somewhat divided, but somewhat together. And then, the past month or so, some stocks have already been heading towards this path for the past year, past 3 months, 6 months. So yeah, 52-week hella highs, 52-week lows, very important to look at. As I was saying earlier, a few big stocks can skew returns for the market. It's important to know how many stocks are doing well versus those that are struggling. This shows the number of stocks on the NYSE at 52-week highs compared to those at 52-week lows. When there are many more highs than lows, that's a bullish sign and signals of greed. So you see the percentage right here, how it's been at. Yeah, it's been up there, but it's been trending down. So you see that in the negatives now. So it was in the positives, pretty much been in the positives, dipped down a few times. You see that October. I'm calling back to October because October was rough last year. That's when we hit some low lows. And yeah, so yeah, you see that right there. So that's what I was thinking about. That's what I was talking about. A few stocks can lead the market up. Important to see the bigger picture of what's going on overall. So next right here, stock price breadth. This one right here is an extreme fear. So you see right now, the gauge actually just went up a little bit. So we're heading towards fear a little bit. Maybe we're coming out of the depths right here. So yeah, it was at 26 when I started this video. Now it's at 27. You still got the market momentum at fear, but got a couple of the indices still at extreme fear. So stock price breadth. This one right here, the market is made up of thousands of stocks. And on any given day, investors are actively buying and selling them. This measure looks at the amount or volume of shares on the NYSE that are rising compared to the number of shares that are falling. A low or even negative number is a bearish sign. The Fear and Greed Index uses decreasing trading volume as a signal for fear. So you see the decreasing trading volume signaling fear right here. Was high. You see that October. Just calling back, just showing you where we're at compared to those real lows of October, because as I know I've been mentioning October a couple times, so I'm going to show you where the market was at last year in October 2022, in case you forgot or in case you need a little flashback, little recall. Yes, 3 years, that's back 3 years. Of course, that's different. So yes, October of 2022, boom. You see those lows right there. You see where we're at. Of course, recovering from the COVID lows right there. Market took off. A lot of stocks did for sure. And then we started falling some up and down, up and down. You can see could definitely draw some lines in here right here. The lower highs and lower lows and different things going on right here. And boom, right here. So we make that low in October. And then we start making, higher lows, higher highs, and start going the other way. So yeah, but you see that October. And so that's how you can see that correlation between these indices, what's happened before in the past and compared to what's going on currently. So yes, let's go back over to Fear and Greed Index. So yeah, stock price breadth, another indicator. Put and call options. Put and call options can definitely show you how investors are feeling based on the size of put and call options, the frequency, the time frames, a lot of various different factors of that right there. Because typically calls are bullish, puts are bearish. depending, because you can still be somewhat, bullish with put options. If you're selling put options and you want to get in on a stock at a certain price, like, yeah, you think it's going to go down, but you want that stock. So you might be bullish on a stock, but you may want to be able to, buy it at a lower price and make some money off of it while you're doing that by selling, put options. But we won't get all into options and everything. But yeah, typically call options, more of a bullish side, put options, bearish. We'll read what's going on right here with this one. So yes, put and call options, 5-day average of put and call ratio. See how it's been heading up right there. So options are contracts that give investors the right to buy or sell stocks, indexes, or other financial securities at an agreed upon price and date. Puts are the option to sell, while calls are the options to buy. When the ratio of puts to calls is rising, it's usually a sign investors are growing more nervous. A ratio above 1 is considered bearish. The fear and greed index uses a bearish options ratio as a signal of fear. See how we're above 1 right there, showing a sign that's considered bearish. So that's the put and call option, still an extreme fear right there. Market volatility, the VIX right here, CBOE volatility index. This is one I like to look at for sure. And before we even get into it, look at October. Just look at October of last year. My goodness, the VIX was going above 30. Oh, what a great time to buy stocks. Yes, the VIX is something I use to pretty much say, hey, Avron, check out the VIX compared to what the market's at. Wow, look at where it's been historically. You see how the market's been pretty well this year. Man, we had a real moment right there in March, and I'll show you the S&P in March. Yeah, we went up a little bit. Okay, it's kind of brushed it off a little bit overall though. But yeah, it still got there. It still got nice buying opportunity. When the VIX was right there. Okay, definitely October. Okay, when the VIX was a high and the market was down, wasn't that a great buying opportunity overall? Pretty much for a lot of stocks. Yes, indeed it was. March, same thing happened. Yes, indeed it was. All right. And you see where we're at now. So yeah, the VIX has been up a little bit. We haven't got above 20 recently, but we got close. I was hoping. Oh yes, VIX, something I definitely use. And let's go over what they state for it on CNN. The most well-known measure of market sentiment is the CBOE Volatility Index, or VIX. The VIX measures expected price fluctuations or volatility in the S&P 500 index options over the next 30 days. The VIX often drops on days when the broader market rallies and soars when stocks plunge. But the key is to look at the VIX over time. It tends to be lower in bull markets and higher when the bears are in control. The Fear and Greed Index uses increasing market volatility as a signal of fear. So what you have to definitely use is to look how it's increasing. Right now, yeah, it's a little bit high compared to where it's been, in the teens, hanging out in the teens, but it's still kind of, not as much as October. All right, that's all I'm going to say. But yeah, could we be headed back there? We could. Could we not? Could we just fall back down and continue? Could the bulls continue to be in control? Still have this bull rally going on? Possibly. Could the bears be in control? Get it back up? Possibly, so yeah, that's what I like to look at for sure, and over historically, and just kind of let me know, like, oh, when was the last time the VIX was trading around 20? How was the market doing? What did it do after, 30? What did it do after? Yeah, so the VIX, you definitely want to look at where it's been, where it's going, what happened last time with the stock market prices, just to get an overall assumption. You may get lucky and buy the bottom, or you may buy around the bottom. It's just about dollar cost averaging. What you want to do basically is continue to buy throughout the year, no matter what, here and there, because your average is still going to be nicely, and the market tends to go up. Let's take a step back 5 years. The market tends to go up. Yeah, we have bottoms, we have drop-offs, we have things that happen. That's the COVID one right there. But where is the market going afterwards? Like that. We can even go back further. The recession, the 2008, 2009 right here. Rough. What are we going? Let's bounce. Let's zoom out. Overall, the market is going up. Sometimes steadier and slower than other times. Sometimes faster and furious, or more furious than other times. So yes, dollar cost average throughout the year is a smart way to do it. And then what I like to do is try to increase even more during these rough moments. So yes, fear and greed. Next up, safe haven demand. Difference in 20-day stock and bond returns. This one's still an extreme fear. This one states stocks are riskier than bonds, but the reward for investing in stocks over the long haul is greater. Still, bonds can outperform stocks over short periods. Safe haven demand shows a difference between treasury bond and stock market returns over the past 20 trading days. Bonds do better when investors are scared. The Fear and Greed Index uses increasing safe haven demand as a signal of fear. That one right there, safe haven demand, is still an extreme fear. I don't use that one as much as some of the other ones that you can kind of tell which ones I've been talking more about, as far as like the 52-week lows, 52-week highs, the moving averages, the VIX volatility, and the put and call options. But yeah, safe haven demand is part of this fear and greed index. So I do want to definitely talk about it some and mention it. That's one of them for sure. And last one right here of the 7 indices that make up the fear and greed index is the junk bond demand. So it's the yield spread, the junk bonds versus investment grade. So those are the kind of, the bonds get ratings. Investment grade bonds are the safer, bonds that people are going to feel, better at. Typically, the rates are going to be different for junk bonds versus investment grade bonds because risk is different. Junk bonds, lower graded bonds. So yeah, junk bonds carry a higher risk of default compared to other bonds. Bond yields, or the return you get on investing in a bond, dip when prices go up. If investors crave junk bonds, the yields drop. Likewise, yields rise when people are selling. So a smaller difference or spread between yields for junk bonds and safer government bonds is a sign investors are taking on more risk. A wider spread shows more caution. The fear and greed index uses junk bond demand as a signal for greed. So this one right here is an extreme greed. So this one I don't use as much either. They state right here, note, the frequent drops of the yield spread on the junk bond demand chart usually appear on the ex-dividend date. The spread typically bounces back after the dividend is paid and normalizes after time. Because a lot of people, they do where they buy stocks by the ex-dividend date so they can receive the dividend and then they'll sell after. And if enough people do that, of course, that's going to drop the price. So prices will go up near the ex-dividend date, and then at and after the ex-dividend date, prices will drop because people are getting out of it. They're like, hey, I'm going to get my dividend. I'm out of that. So that can happen. That can change the way things look on the chart for sure. So this one right here, you see where it's at currently, around that 1.75, 1.74% right there. And go back to October, that moment, yeah, somewhere around 2 right there. But you see, this one's kind of been somewhat steady. We had some spikes here and there, which definitely could be around certain, ex-dividend dates. So yeah, this one right here, like I said, I don't use this one as often either, but it is one to look at. This one's still an extreme greed. This is the outlier right here. Out of all these, of the 7, you've got 2 in fear currently, 4 in extreme fear, and 1 in extreme greed. So overall, with that and with where they're actually at on the chart and their numbers and everything, that is giving the fear and greed index a 27, right on the lower end of fear. So that is very interesting right there to look at. This is something I would definitely say if you're an investor or trader, you might already be using this. Maybe use it a little roughly. You just kind of check it out when it makes headlines, people make videos on YouTube about it and everything. But it's something I like to look at this, kind of see, like take a step back. Like when I noticed overall market doing something, where are we at? Oh, we're in greed. We're in extreme greed. Let me not get caught up in all that. Let's not, increase positions too heavily. Let's step back some. Let's still dollar cost average here and there. Some stocks more than others if things are going on in those that cause for more, increase in appreciation or anything like that. But let's look at that. Fear and extreme fear. Those are times I personally like to buy. And I'm going to end this video on a famous quote by Warren Buffett. And I actually made a video on some of my top favorite quotes of Warren Buffett and pretty much explained them in ways that, just common sense types of ways. And also in, book sense type of ways, basically. And I'm going to wrap up the video and end it here with a powerful, excellent, awesome quote from Warren Buffett. Be fearful when others are greedy, and be greedy only when others are fearful. Let that soak in. If you want to know more about that quote, what I think about it, definitely check out my video. But you pretty much get the gist of it from the quote. So yes, and that is it with my video on the Fear and Greed Index. Hope you all enjoyed the video. Take care.